when I look at gold, I think gold's going to end up having a very nice move here to the upside. I can share my screen and just kind of show you what the chart of gold is pointing to. So this is the daily chart of gold. It's had a series of bull flag patterns. So it has a big run up and then it pauses for a while, which is what you want. It has a big run up, then it pauses. We've had a nice run up and now it's pausing. So it's stair stepping its way up. This is more so a controlled move. You don't want really something that just goes parabolic straight up. Even though you could argue when you zoom out on this chart, it is a fairly parabolic move. But after this, if we were to use a Fibonacci extension, which is one of the most powerful technical tools I think you can use for charting, it will give us an idea of where the next upside targets are. And so we can just base it off the rally. So from the low over here to the high and back down. And this will tell us where kind of sentiment and momentum, kind of where the universe is going to more or less pull gold eventually. It is going to want to see gold up to about 4,700 somewhere, which is about a 15% move. And then it's going to want to go all the way up around 26% move to about $5,200 per ounce. So that would be the next move. And I think if the market is where I think it is over the next 2 or 3 months, I think we could see gold surge up to this level. I also think the stock market could have a very sharp sell-off going forward. So I think, as you just mentioned, I think there's going to be some rotation of capital. I think the stock market might start to sell off. And as money comes out of equities, it's going to look for a safe haven, somewhere to go that's working, and it'll be precious metals. And so that money is going to come out of stocks and just pile into the precious metals space. And as we know, the stock market is much bigger than the gold market. So when you've got trillions of dollars coming out of the stock market very easily, which is nothing, that's going to pile into the gold market and just skyrocket, shoot higher, because it's a ton of money for the gold space to kind of handle. So I think we could see a very strong, if I was to look at the chart, we could potentially see like some crazy parabolic move up into this $5,200 level over the next month or three. So that would be like the perfect storm. To me, that would be the signature of precious metals are about to put in a top, including silver and platinum and palladium, and also that the stock market has already put in a top, and that we're about to start something much bigger and uglier. I think both of these are going to require some piece of news. I think we're waiting for some economic data or something that's going to trigger more selling in the stock market. It could be in the US, it could be jobs data, it could be unemployment, something like that, that comes out that, finally creates a big downdraft in equities. And of course, that will create fear, and money, when it's fearful, naturally wants to kind of move to gold. So
Chris Vermeulen warns markets are at a major tipping point. He sees gold jumping 25 to 30% to 4,700 to 5,200 soon, followed by a sharp correction in both stocks and metals within 6 to 12 months, like 2008. The real buying opportunity comes after the reset, when gold and junior miners could begin a multi-year run toward $5,000 to $12,000. He says the stock market is weak beneath the surface. Oil is signaling slowdown and capital preservation. Not buy and hold is key. Thanks for watching. Subscribe to Fine Metals for more updates.
I think the junior miners are gonna do the best. So like if we were to just kind of let's just go back to the gold chart for a minute, and we'll just go to whoops, what did I click here? Let's go back to the monthly chart. I think we're going to go through something like this. So if we were to look at this chart, this is back in 2007. We saw the stock market peaked, gold put in a peak, and then it went into this multi-wave correction where gold pulled back 34%. And so I believe we're kind of like right here in gold. I believe we've got like one more push up, a couple more of these monthly bars push to the upside, and then I think we're going to have this big pullback. And that'll be the financial reset. There'll be all kinds of stuff happening. After it puts in a bottom, that is when we go into the big multi-year phase of a rally for gold. I believe this is when the miners will come to life. This is when the miners really came to life last time. It was after the correction, the juniors, the micros, all just went absolutely ballistic for many years. So if I was to just go back onto this chart, I'll show you where I think we are right now. I think we're going to see gold rally up Let me grab a pencil here. And then we're going to see it go into a multi-month pullback. And then somewhere over here, after it's blown up, it's gone and hit these upward targets and pulled back. I think this is when you get invested back in the juniors and the mining stocks, and that's when I think that's when gold I think is going to have the next really big push that lasts a long time, where we see that maybe the U.S. dollar actually does collapse after we have this next reset, and gold becomes the ultimate kind of reserve currency or the ultimate safe haven from currency collapse. And that's where gold could go to 5,000, 12,000. Who knows after that? And that's when you want to get involved, I think, in the juniors. That's when they come to life, in my opinion.
That's very interesting, Chris. Would you be interested in things like copper, uranium in the commodity sector right now?
Not right now. I think after a financial reset, to me, everything feels very frothy. Everything feels overvalued. I feel like there's a ton of risk everywhere that everything could collapse at any given time. We're just kind of waiting for that piece of news or the event to trigger it. People have, so I feel like uranium is a crowded space. Precious metals is on its last push. Copper, I'm not, I will like them when I think everything's been reevaluated. Like we've got some reset in asset classes, meaning a big reset in prices across the board. And then I'm going to love it. I've been excited to get into uranium for a long time. I think it's going to be a very big opportunity. I think robotics is going to become a very big thing. I think it's going to really take off. It's going to be one of the next, I think AI obviously is huge, but then it's going to come more into robotics as well. There's going to be some huge game changers over the next 3 to 5 years. And I think that it's going to be a sector or a pocket I'm very much so a technical trader. So I like to look at the charts, and from looking at the charts and kind of ignoring the news and the politics and all of that stuff going on, the charts are telling us there's some uncertainty. There's a lot of fear in the market. Mostly we see that when you look at the precious metal space. So we've seen gold, silver, platinum, palladium, all of those have taken off. They've been going up for a long time, but really it became a crowded trade really in the last month and a half, 2 months. We saw a lot of people really pile into that space, and we've seen some pretty big moves. Now, over the last month or so, we have had a pullback. It got a little frothy there, but the precious metal space, from a big picture, global picture, macro, is telling us that people don't trust governments, they don't trust systems, they don't trust currencies. And the US dollar the dollar index itself has been carving out a bottom, what looks to be like it's ready to start a big rally. And typically, when we see a global crisis and financial major problems, we tend to see the US dollar index actually perform very well and move higher. So it is trending higher. It looks like it has a lot of room to go. So, that's another thing that's slowly maturing and telling us that, hey, it looks like there could be some type of chaos in the systems over the next probably 12 months or so.
Mm-hmm. And so, Chris, if we look at the stock market, so there are, I suppose, some economic indicators that tell us that there's this slowdown in the US economy. But we have been looking at the stock market for years, and it looks like nothing can stop this trend. So how are you looking at the stock market right now with the liquidity situation and with these fundamental factors as well?
Yeah, I mean the stock market is generally going up and to the right. I mean that's what it does most of the time, and it always climbs this wall of worry. And as you just said, it's like nothing seems to be able to stop it, right? Well, this is the catch. Most people always think like, yes, no matter what, you just buy every dip, you'll be okay, and over a 100-year window, you'll be fine. You will be, but obviously, if you're close to retirement or retired, you definitely don't want one of these resets, one of these dips, to turn into something bigger. And eventually, we're going to have one of these pullbacks is going to turn into something really big and bad and ugly. And so you have to be protected for that. Going in, as we mature, like this market does seem resilient. It just keeps bouncing back. The AI bubble continues to drag things higher. As you and I are speaking now, it's November 24th, and we've got Google, we've got all the major AI stocks are muscling their way higher, and they're dragging the indices up. So eventually the music will come to a stop, and there'll be a reset, and people have to have a game plan for when that happens, because you'll look like a hero for 5, 10, 15 years, and then suddenly one bad dip that you thought was an opportunity, and you add more turns into your worst trade ever, and it costs you 5, 10 years of interest, of savings, of huge stress, and all of that stuff. So I mean, you got to be prepared when these pullbacks take place. You never know which one's going to be the start of something bigger. For the precious metal space and the equities market, I feel like we're kind of at this last little push. I think over the next 3 to 6 months, we're going to see probably the gold market and precious metals top out. We're probably also going to see the equities market top out. I think there's going to be a lot of volatility, a lot of big sideways and huge range of the market, kind of both markets kind of trying to figure out what they're going to do. So, I mean, if I had to look forward, 2, 3 years from now, I think we'd probably see the stock market sharply lower or potentially still where it is, but it's probably have had a huge sell-off along the way. I think precious metals over the next 6, 12 months are going to be lower than where they are right now. I think, or maybe potentially where they are right now, but they'll have already rallied up and come back down. So we're in this mixed market. I mean, it's hard to give a forecast, right? I think it really depends on your horizon, and I don't look too far out in the horizon. I don't like long-term forecasting, like for pricing, because I do think gold will be sharply higher, stocks will be higher. If you look far enough forward, they're all going to be higher. Um, but I think it's more so narrowing the shorter term price action, as you just mentioned, not the daily moves, but more or less each year there's going to be certain waves that roll through this market, and I like to try and catch those waves. So I usually only look forward like 1 or 3 months because that's what my time horizon is for the markets. I ride one wave at a time, manage each one individually.
Mhm. And Chris, if possible, if you could look at the silver chart as well and look at it from the technical perspective as well, because there's this big cup and handle that's here from the 1980s. Are you paying attention to that as well?
It's too big of a chart pattern. I mean, a lot of people talk about it. Let's just go way back here. I'm not a fan. I mean, usually my take is people who see this as a giant cup and handle. I mean, they're just way too bullish, too much of a silver bug. I think you got to take, for this cup and handle pattern, I don't know. It just doesn't feel right to me. It doesn't feel like a clean cup and handle. You can turn most charts into, you put a bias as you want. Like this cup and handle is obviously, here's the cup, and then you've got this huge handle right through here, and now we're trying to break through these. But I don't look at it that way. Like I'm not gonna base something on a 45-year pattern. I'll be dead by the time the whole pattern plays out. I'd much rather focus on the shorter term charts and play the moves. Now, I do think silver could rally to like 61, 71, potentially actually blow off into the 80s, $80 per ounce over the next 1 to 3 months.
Oil and natural gas. So even at the current valuations, do you believe they would go even lower during this reset?
I do. I think oil is going to end up having a fairly big reset in price. If we just kind of look at the price action, oil right now is trying to hold on to this 55, 56 dollar per barrel level. If it breaks that, I think we're going down to the mid 40s, and we could even flush down into the 30s. I think it's going to see a very big unwinding. And again, this is to me, like oil's been going down for a long time. I think this is telling us the economy is slowly weakening, things are getting worse. And I think a lot of things are going to hinge around a piece of news that's going to create a drop in oil, a breakdown. It's going to create a breakdown in stock pricing. People are going to always say blame it on the news, but the charts have, everybody always labels it. They're like, oh, the Fed caused that move and they caused this or this, they always put a label on it. But the reality is the charts are already telling us a big event is coming. It's already pricing it in. The trend is already down. The trend is more likely to continue than it is to reverse. So the trend is down, meaning it's already telling us it's going lower. Um, and so the charts kind of tell us all this stuff. And then usually there's a piece of news that helps kind of push it over the threshold and create that tipping point for a new massive trend change. So I think oil is going to be down in the 40s pretty soon. And it's going to there'll be some news that helps kind of make it break those lows. I would think it could be jobs number in January or like unemployment, something like that. I'm not sure, but I'm pretty bearish on the energy space. And if we look at natural gas, which I don't follow natural gas too much anymore. It has these like massive cycles every few years, every 4 years, if it's going to load here. I don't have the data set to go back that far, but overall, natural gas, I steer clear of it. It's very volatile. It likes to have big spikes and fizzles out very quickly. Usually winter is a strong season for natural gas. As we go into the winter, the cold months, we tend to see it pick up. But I do think we're going to see oil move lower. I'm an active investor in terms of I look to move in and out of the markets. When stocks are going up, I want to own them. When they're not going up, I want to move away from them. And sometimes we move to the dollar, or we move to cash, or we move to bonds, or even precious metals. So you have to kind of dance with the market a little bit, and you can't expect every dip to be bought because that mentality eventually will cost you huge and you'll regret it. It works most of the time, which is what creates this false belief. Everybody just keeps going with it, right? And everybody looks like a hero every time until the one time happens. And that's when it really separates true investors who understand risk management and those who just did what they thought worked. And they realize, it hurts them down the road. So that's where you really see the separation between true investors and just people who are trading and going with, trends more or less.
And Chris, so we had increased volatility in the US stock market recently, but do the charts still look relatively healthy right now?
They don't look that healthy. Like really, we're not seeing, we've got a strong bounce over the past couple of days, but we have seen the stock market, moving down for the last month. Lots of volatility. We've seen the VIX spike up, the put call ratio. Um, it's not the strongest market environment. Most sectors are not trending up. Most sectors are trending down. They have bearish chart patterns. Overall, the stock market, if we look at the S&P 500 and the Nasdaq, they are kind of in a neutral territory. Like right now, we're just waiting to see, are they going to start another uptrend, which we want to take part of if it turns into a trend, or is it going to roll over and break down? And at this point, really, it's a coin toss. So we're on the sidelines for the last couple of weeks, just waiting for this to unfold. Let's figure out, is it going to break down and create a much bigger correction, or is it going to stabilize, start to turn up and go higher? So there isn't a clear picture. And so a lot of times the markets don't have a clear picture. And so we actually move to the sidelines and watch, because sometimes if it's a coin toss, I don't really want to gamble my life savings on it. I'd rather step aside, let it figure out what it's doing, and then get on and chase the trend and take advantage of whichever way it goes. So there isn't a clear direction right now. To answer your question, the market doesn't look very strong. It's not a broad market rally. So that's, but AI is so heavy weighted in the stock indices that it doesn't matter how weak the rest of the market is. You just need seven stocks to keep going up and they'll drag it higher. So, and the market has been very weak for a long time, and the AI has been doing most of it. So in this way, it kind of falls back to what you said. The market is resilient. It just keeps going higher. And even though the market is weak, it can still keep going higher.
Most people, Chris, who are interested in gold and silver also want to hear about mining stocks. So they have performed really well recently, but how do they look from the technical perspective as well?
Yeah, the large caps have done really well. They've obviously broken to some highs. They're starting to show a little bit of signs of volatility. Um, I mean, they're definitely a very strong move. It became a very crowded trade a few months ago, as I mentioned earlier. Everyone kind of piled in at the same time. I think gold miners are going to still move higher with the rest, like with the rest of the precious metal space over the next 1 to 3 months. But I do believe they will come back down very sharply when we go into a financial reset. If we look at like the gold miner juniors, you can see they're not breaking out to all-time highs. They've had a very nice run. They're really stuck at a resistance zone through here. Very significant lows and highs. And so again, I think we're going to see the miners probably have one more push, one more parabolic push, maybe, into this next critical pivot level somewhere around here. So there's still quite a bit of upside in gold, silver, and miners. I think we could see like 20-30% upside in gold. I think we could see 50+% upside in silver. If we were to look at junior miners, there's potential for, 40% move or so. So, we're in this kind of a little bit of a bubble phase where things are going, parabolic. in terms of the long-term charts. And when things go straight up, they come straight back down. You can see the silver miners. It's the same type of thing. The question is this the top? Have we already seen it? Or is it going to have one more big push? And right now, the charts are still pointing to we're going to have one more push higher. But after that, you better be ready to pull the chute and lock in gains, and then let the commodities, let the air out of the bag a bit and buy them back, hopefully at a lower price. Or at least buy them at the same price a few years from now after they've built this big bull flag pattern and they're ready for another breakout. And you buy it on the next breakout. Because a lot of times commodities will go dormant for 3, 4, 5 years. And why hold them if you could just move to something else where you could make money for 3, 4, or 5 years and then just get back into the precious metal space when it's good again? And that's what I do. It's like just hold stuff that's working and get rid of what's not. And right now the precious metal space is working, and I hope we have one more big blast higher. That's my hope, and the charts are still favoring that, although they have some signs of like maybe it has put in a top. But underlying, I still think there's one more push left in this market based on sentiment and where investors kind of fear and greed levels are at right now.